Hare Krishna. Welcome to Tax Guru YouTube channel. This is CA Rohan R. Pingle, practicing chartered accountant based in Mumbai. Also, partner in Motilal and Associates LLP, member firm of Marks Network. Welcome to video series GST Relearn part 21. And today we are going to discuss topic offenses and penalties and ethical aspects under GST. So let's dive into it. Let me allow to share my screen. So today's topic under video series GST Relearn, we are going to discuss offenses, penalties, and ethical aspects under GST. So let's see what we are going to learn. Overview of offenses and penalties, and then we will see each section wise, section 122 to section 138. Every section we will see what is the provision under that. Then we will also see practical case studies, okay, and conclusions that can be drawn from today's learning. So let's start. Overview of offenses and penalty. The GST law categorizes non-compliances into four classification, that is monetary penalties, confiscation, arrest and prosecution, and compounding. Okay, the offenses, the categories are like in divided into four categories. The non-compliances, it's called it as a non-compliances. Okay, so non-compliances categorized in four parts: monetary penalties, confiscation, arrest and prosecution, and compounding. Okay, so let's see one section by section. Section 122, penalty for certain offenses, that is covered penalties are any taxable person and also persons aiding, abetting, transporting, concealing, that is covered under section 122 subsection 3. We will see major offenses with practical example. So offenses are supplying goods or services without invoice. Okay, supply of goods or services without issuing any invoice. So example, a trader supplies mobile phones for rupees 10 lakhs without generating any invoice to avoid tax, issuing invoice without supply, fake billing to pass what ITC. So in the, it doesn't provide any service or supply any goods, but issue invoice so that the opposite party will take a ITC of it. Collecting tax but not paying to government within 3 months, that is a prescribed time. That is, restaurant collects rupees 18,000 GST in April but fails to deposit until July end. Wrongly availing ITC, that is availing of ITC on ineligible motor vehicles. Okay, so these are the offenses, and we also have also seen what are the practical examples so that you understand in a better way. So let's see what are the quantum of penalties for such kind of offenses. So if no fraud involved, then 10% of tax or rupees 10,000, whichever is higher. And if fraud is involved, then penalty would be penalty equal to tax amount or rupees 10,000, whichever is higher. Okay, there are two types of penalty. One is without any fraud, means where fraud is not involved, then penalty would be 10% of tax or rupees 10,000, whichever is higher. And in case of fraud is involved, then penalty would be tax amount or rupees 10,000, whichever is higher. Let's see an example. A taxpayer underreports sales tax short paid rupees 2 lakhs. Then if non-fraudulent, if it is there is no fraud involved, then penalty will be 10% of 2 lakh, that is rupees 20,000. And if fraud involves, penalty will be full tax, that is rupees 2 lakh. Okay. Means in no fraud cases, it is a 10% of tax. Okay. So tax, it's short paid tax of is 2 lakhs. So 10% of 2 lakh is 20,000. So in case of no fraud, then the penalty will be that means 20,000 or 10,000, whichever is higher. So 20,000 is a higher. So that in that case, rupees 20,000 is a penalty. And in case of a fraudulent, penalty will be full tax or 10,000, whichever is higher. So here tax is 2 lakh rupees, which is higher than 10,000. So the penalty will be 10 rupees 2 lakhs. Next, section 123, failure to furnish information return. So penalty will in that case is rupees 100 per day and maximum is 5,000 as per Bear Act. So example, bank fails to file information return for 50 days, then penalty will be calculated as rupees 5,000 into that is 50 into 100 per day comes to rupees 5,000. That is minimum penalty is comes to means maximum 5,000. Okay, it cannot be more than that. Okay, so penalty will be 50 into rupees 100 per day. Okay, so it will be 5,000 minimum. Section 124, failure to furnish what? Statistics. So fine up to rupees 10,000 plus rupees 100 per day for continuing default. Okay, section 123 talks about failure to furnish information return. Section 124 talking about failure to furnish statistics. The fine up to 10,000 plus rupees 100 per day in case of continuing default. Section 125, general penalty. So the penalty in case there is no specific offense, it's a general penalty is up to rupees 25,000 where no specific penalty prescribed. Example, taxpayer fails to display GSTN at premises, then penalty can be levied up to rupees 25,000. Means it is not provided under any special provision under any section, then penalty means any offenses is not covered specially under any provision of the act, then general penalty will be levied that can be rupees 25,000. So the example is like taxpayer fails to display GST and it is not covered under any provision of the penalty, so penalty can be levied by the department at rupees 25,000. It's which called it as a general penalty. Section 126, general disciplines for penalty. What disciplines we need to follow? Key principles: no penalty for minor breaches. Okay, that is breach up to rupees 5,000, less than 5,000 of tax, then no penalty for such cases. No penalty for rectifiable errors without any fraud. Means whatever, if there are the errors or something like that which is rectifiable and no fraud is involved in such cases, then no penalty can be levied. Opportunity of hearing is mandatory. Penalty must be proportional to the extent of the error is like that. So example, wrong HSN code entered but tax fully paid, no penalty. Means it's a error. Okay, wrong HSN code entered but tax is what? Fully paid. So no penalty. So these are the some important principles that need to be followed as per section 126. Section 127, penalty in certain cases where the proper officer decides that the person is liable to penalty even when not covered under any other section. Failure to comply with departmental summons. So here a proper officer, if it comes to that the person is liable to penalty even when not covered under any other section. Means proper officer he had a power to levy a penalty in certain cases. That is section 127 is talked about that. So failure to comply with departmental summons, then proper officer can levy a penalty. Section 128, power to waive penalty or fee. So government may waive penalty or late fee through notification. So if government thinks that in it is in overall a public interest, so as per section 128 that government has a power to waive off the penalty or any fee. Next, section 128A, waiver of penalty or interest. Section 73 demands in that related to that. So key features is applies only to wrongly availed ITC or non-fraud cases. That is section 73 applies only to wrongly availed ITC. Means section 128 applies only to wrong availed ITC or non-fraud cases. Pay entire tax, that is penalty and interest waived. If assessee pays entire tax, then penalty and interest can be waived. Example, demand under section 73 for rupees 1,50,000 ITC wrongly availed, taxpayer pays full tax, then penalty can be waived. So section 128 gives the power to waive off the penalty and interest under means related to offenses or demands under section 73, where wrongly availed ITC or non-fraud cases, and where the entire tax paid by the assessee, then penalty and interest can be waived off. Section 129, which talks about detention of goods and conveyances, penalty for release with invoice but minor defects, nominal penalty, and without proper documents, 100% of tax or 50% of value for unregistered. Section 129 talks about detention of goods and conveyances. In that case, penalty to release the goods and conveyances is that with invoice but minor defects, nominal penalty. Without proper documents, 100% of tax or 50% of value needs to be paid to release your goods. Section 130, confiscation, triggered when in cases of intentional evasion, transport without valid documents, supply without invoice. So penalty would be tax plus fine plus confiscation value. So section 130 is talks about confiscation triggered in cases of intentional evasion, transport without valid documents, and supply without invoice. And the penalty is equal to what? Tax plus fine plus confiscation value. Then now sections 131 to 137, that is other penal provisions. Okay, let's see. Section 132, prosecution for serious offenses includes what? Fake invoicing, ITC fraud, suppression, which is more than rupees 5 crore. So section 132 covers what offenses? Fake invoicing, ITC fraud, suppression more than 5 crore. Section 137, offenses by companies, directors or partners liable if offenses due to their consent, neglect, or connivance. Okay, so section 137 talks about offenses by companies, but who are liable for that particular offenses? Directors or partners liable if offenses due to their consent and neglect. Okay, that is the case. Section 138 talks about compounding of offenses. Offenses may be compounded by paying the specified amounts, and certain offenses cannot be compounded like repeated offenses. So, section 138 is talked about compounding of offenses. Ethical aspects for ICI members. So, though not expressly part of the GST law, compliances ethics arises from what ICI Code of Ethics, that is integrity, objectivity, and professional behavior. Ethical obligations under GST practice. Avoid what? Participation in fake invoicing. Maintain due diligence in ITC claim verification. Ensure accuracy of returns. Proper disclosure to clients of legal implications. And professional misconduct cases would be if a CA helps a taxpayer in issuing fake invoices, Section 132 may apply to the taxpayer, and ICAM may take disciplinary action too. Let's see some of the practical case studies. Okay. Case 1, fake invoice ITC fraud. A company creates bogus invoice of rupees 5 crore. Penalty under section 122 subsection 1 clause 2, and prosecution under section 132 as value more than rupees 5 crore if it is. Case 2, minor procedural error. Wrong GST and entered on invoice. tax correctly paid, then section 126 applies, which is no penalty. Case 3, goods detained in transit. Driver has expired e-way bill, penalty under section 129 and release only after paying the applicable fine. Case 4, failure to appear for summons. Okay, so employee ignores the GST summons, penalty up to rupees 25,000. That is a general penalty which can be levied under section 122 subsection 3 clause D. And that's it. Now we will see key conclusions that can be drawn from today's learning. Let's see one by one. GST penal framework is comprehensive and what multi-layered. GST law contains a wide set of penal provisions ranging from monetary penalties to arrest and prosecution. The presence of section 122 to 138 shows what the legislature intend to cover every possible non-compliance scenario. Penalties are proportionate and intent based. A core conclusion from section 126, that is a general discipline, is that GST penalties are not meant to be harsh for minor or inadvertent mistakes. So the law distinguishes between the bona fide errors, procedural, small value, easily rectifiable, and intentional evasion or fraud. So these are the broad categories of distinguish. That is a bona fide errors and intentional evasion or fraud. So this principle of proportionately is strongly reinforced what I say BGM explanations. Fraudulent offenses invite what stringent action. Section like 122 subsection 1, section 132 that is about prosecution and section 130 about confiscation clearly show that GST law is highly stringent against deliberate evasion. That is the deliberate evasion, particularly fake invoicing, bogus ITC, collecting tax but not paying, transporting goods without documents. These are the deliberate evasion. Such offenses may lead to what full tax equivalent penalties, arrest, and confiscation of goods and conveyances. Procedural non-compliance is treated separately. Offenses like failure to file information return, failure to furnish statistics, or other minor violations are penalized with capped monetary fines, reinforcing a principle of what fairness. Waiver and compounding support for voluntary compliance. Section 128, 128, and 138 reflect the government's objective to encourage voluntary compliance and reduce what litigations as much as possible. So key takeaways is non-fraud cases under section 1 under section 73 can get full waiver of penalty or interest by paying the tax. Many offenses can be compounded by paying a prescribed amount, avoiding prosecution. This shows the law balances enforcement with what facilitation. GST movement controls are strictly enforced. Detention and confiscation provisions highlights what that movement of the goods without proper documents is serious violation. The law assumes that goods in transit are a strong point of leakage and therefore requires what strict compliance. Responsibility of company officers is what high. Under section 137, company directors, partners, karta, trustees, etc. can be personally liable if the offense is occurred due to their consent or neglect or ignorance. So this prevents companies from hiding behind the separate legal identity. Proper officer must follow principles of natural justice as mandated in section 126 and reinforced through ICI BGM clarifications that penalties cannot be imposed without hearing. Means principle of natural justice should be followed. Order must specify the nature of breach. Penalties must be fact-based and justified. This protects what taxpayers from arbitrary actions. Ethical responsibility of professional is crucial. Even if not part of the GST Act, ICA's ethical framework strongly implies CAs must avoid facilitating the GST fraud. CAs must follow due diligence in checking the ITC invoices and documentation. Mixed conduct can attract what both GST offenses if aiding the evasion and ICI disciplinary action. So ethics serve as the backbone of compliant GST practice. Very important for the members. The overall objective of GST penalty system is what? Compliance and not revenue. Means penalties are levied. The provision itself talks about the compliance part. Means should be compliant, should not the intent of the government is not a revenue generating from that penalty provisions, but the intent of the government is compliance of the system. From the structure of section 122 to 138 and explained through IBJ commentary, the clear conclusion is that GST penal provisions aim to promote what? Voluntary compliance. Promote what? Voluntary compliance, ensure fairness, and discourage what? Fraud, protect the revenue, not to punish honest taxpayers. And that is what the important from any law and from the government too. So that's it for today. We learn penalty penalties, offenses, and ethical aspects under GST. So that's it for today. Hope you are getting the valuable knowledge from video series like this. Stay tuned to the Tax Guru YouTube channel. If you are not yet subscribed to Tax Guru YouTube channel, then do subscribe for latest update and video series like this. So we will meet in next video. Till then, bye bye. Take care. See you soon. Hare Krishna.